So in this interview, I get to speak to Jason Graystone, all about investment and trading. Now, I'm not a trader, I know nothing about this area, so we don't go into sort of specific details. If you're already sort of a trader, this perhaps isn't the interview for you. Perhaps you can check out some of his other information. We'll go into more detail. Here, we talk really about wealth creation. And we spend quite a little bit of time talking about replacing your annual salary and a really sound methodology for achieving that. And, you know, basically a pretty sound technique for replacing your annual income and doing so in sort of 10 to 12 years. That's a reasonable amount of time, but at the end of it, you've replaced your income with a passive income stream, or a largely passive income stream. Now, how incredibly valuable is that? And what Jason's done himself is start with that sort of mentality and then improve the techniques and elements that he's using to achieve that. And he's got it down from sort of 12 years, which might be the norm, down to less than 3 years, which he's done. Obviously, that's through improving his own knowledge and experience, etc. So a lot of information on this topic in this interview. So I think it was really, really valuable. I hope you enjoy it. Let's dive in. I am here with Mr. Jason Graystone. Welcome.
Thanks for having me.
Pleasure.
For letting me come on.
Yeah, I'm looking forward to it. So, and actually one of the reasons I love doing these events is because I get to learn. And so it's a really good kind of hack, really. I get to learn from guys a lot more knowledgeable about me and certain areas that I'm particularly sort of negligent in. And one area I'm not particularly knowledgeable in is investments, trading, anything of that era. So, you know, really looking forward to speaking with you today. So, as a kind of newbie, so just to give you a little flavour of myself, which is probably not too dissimilar to much of my audience, had done very little with regards to investment, done a couple of ISAs in the past, never been a trader by any description, and the rare occasion I've had a bit of spare cash, honestly not really knowing what to do with it, and just being really honest, have thrown some of that at property, mostly because I didn't know what else to do with it. And I didn't think it was a bad idea, but also I wasn't sure it was the smartest idea either. I kind of felt there probably was better solutions, if I'm honest, but I just didn't know what it was yet. I chose not to invest the time that I perhaps should have done to work that out, and I went, you know what, I'm just going to buy another little place in London, and that's a relatively safe-ish investment. So that's kind of a picture of me.
I think that's just kind of most people, to be honest.
Yeah.
Definitely.
Yeah, I do think, and perhaps you might disagree, but going back 10 years ago in the UK, property investment was almost as close to a no-brainer investment as I think you could get. I don't think that's the case any longer, but I say that as someone that's not particularly geared up in property, not massively knowledgeable there. What would you say about someone that's maybe thinking about maybe throwing some money at property, or maybe considering other avenues?
Yeah, as you say, I mean, it all comes down to what suits your personality and what suits your values, really. Because, as you said, you mentioned earlier, you said, I hadn't spent as much time as I should have. I think people beat themselves up a bit about not doing stuff that maybe other people are doing, and the problem is with that is when it's really people that have a fascination and have a high value on wealth building that spend all the time and effort into researching it and putting it in place, and people who like fitness go and research that and get fit bodies and six packs. And when they kind of, like, if I look up to someone with a six pack, I'll probably say something like, I should spend more time in the gym, but really it's not something that I want to do. I have to do that, and I sometimes I don't want to go to the gym, but I always want to research wealth building, and I always want to look at stocks, and I always want to look at the markets. So there's first thing I would say to anyone who's thinking about investing is that if it's really not something that you are remotely interested in, then just delegate it. Get someone else to do it, or put your money with something that suits you, that you don't require too much understanding, like property or something like that. But there are certain what I call compulsory investments, which require very, very little effort, very little skill, little time, and just by making these compulsory investments, you'll be ahead of the inflation rates. With regards to, I'll talk about that in a bit, but with regards to property, when I say suits your personality, I've always looked at property as something that has got erosion going against you, you know? So there's always repairs, and there's always, like, as soon as something's built, it's decaying, right? So we had a pool in our last house, and it had a leak. And I thought to myself, well, when they put these pipes in, there was these great minds sitting around a table discussing how they could build the best PVC and how it would not erode. And then as soon as they build the thing, it's laid in the ground, and from that point on, it's just decaying and decaying and decaying, and you've always got that going against you. So you're putting your money into something that is always got that entropy going against you, right? So for my own, with me, it doesn't sit right. So I've never been a property guy because I would rather put the money in the minds sitting around the table, evolving the next product and the next product and the next product. So you've kind of got that going for you whilst you're asleep. People around the tables designing and innovating. So I'd rather invest in the companies and the minds rather than a property or a brick. So it just comes down to what you're comfortable with, and property has never been one that's been big for me. If I was to invest in property, I'd always go for kind of land and commercial units or multiple apartments. But as you say, if you invested back in the 90s, your quid's in. But the thing with property is all the money's in the property, and you've still got to go to work to pay for your lifestyle. And I'm very much about income generating or liquidity. So I'd rather have 500k equity out of a house that's going to pay me for the next 24 months rather than to do nothing, or to build new businesses rather than to have it stuck there where I have to go and work and pay for an empty house or the upkeep of a house.
And does your sort of view on liquidity change consistently? Are you constantly reviewing that?
Yeah, so I have an investment, quite a big investment portfolio now that's made up of all different investments. So there's index funds from very, very low cost, low risk, through to kind of mid cap stocks, which is a bit more risky, and then up to trading the financial markets, which is pure speculation. And I'm constantly reviewing the liquidity. I always make sure that I have certain liquidity in the account. So I always like to have 12 months living costs in liquidity at any one time. That's another thing. A lot of people, I think people have come attuned to this, especially via this pandemic, is they say, I feel like I should be doing something with this money that's sitting in the bank. And I say, look, just save up 6 months living expenses and have it in cash, and don't do anything with it. Stick it in a high interest account, but don't put it in the markets, don't invest it. And the reason being is because when you know that you've got access to 6 months living expenses at the drop of a hat, it does something to your brain, and it relieves a part of your brain that allows you to be a bit more creative. So just from having that, there's a return on investment, because you're going to create better products, you're going to be speaking better to your clients, you're not going to have that, if someone doesn't pay an invoice or something, or queries your work, you're not going to snap at them. You're going to go, don't worry, let's get this sorted, So there's a return on investment in just having it in cash. So the first thing I do is make sure I've got a buffer of cash. I think everyone around the world now has seen how important that is. Certainly where we've seen, the tides really come out, and we've seen who's been swimming naked in terms of the businesses out there, right? It's it's very, very important to have that buffer in place. Then once I've got that, then I go into kind of like a pyramid. So it's like very, very low risk, low time and low skill investments at the start, right up to high skill, high profit, high speculation, high time, more time, which is trading the financial markets. So I kind of build those buffers. So 12 months cash, and then I might put 3 to 6 months living expenses in a fund, and then 3 to 6 months living expenses in stocks, and then 3 to 6 months living expenses in my trading. And it kind of works out, by the time I get to my trading side of my account, it's about a 30%, 70% split most of it is in the lower risk stuff,
Okay, got it.
and the small portions in the higher risk stuff. And that way, you just maintain that calm brain throughout, because you just know that well, if I lose this, if I lose 10% of this 30% portion of the entire lot, well, it's not really going to affect me that much.
So that's really kind of like a mindset tool then. That's having this sort of buffer zone. I'm really interested to say that, because I mean that's something I do have, but I have the kind of opposite thoughts. It's like, well, maybe that isn't the smartest way of because it obviously isn't doing anything. It's not going to gain anything in terms of savings, because savings rates are so low, etc. So I'm interested to hear you kind of vindicate that a little bit, but I did it out of naivety rather than planning approach. But I guess it does, and particularly right now we're recording this. Well, I guess only history will tell us if it's in the beginning, middle, or end of a sort of pandemic. But it's nice to have a couple of quid there. So there's your growing a new product or a new business.
I think we're in the. I think we're going to see another dip when we see the second quarter earnings come out. I've studied the last 9 recessions over the last 92 years, and I've seen some very strong patterns there. If you take out the Great Depression, which skews the information a little bit because that lasted 299 months. But if you take the median of all of them, you'll see that on average, the recovery will take about 3 years, 3 to 4 years, and the average drop is about 40%. So we dropped to about 30% earlier on this year. We're about to see the second quarter earnings come out soon, and I would expect another little dip, and then about a 3-year, about 11 to 18 month recovery period from the bottom, but totaling about 3 or 4 years for the whole thing. So, now is a great time to start investing in the market, the entire market, if you like.
And if someone is really new to this, for example, myself, maybe, my naivety right now is quite high. Maybe this is time to be doing research, to be educating ourselves, and then slowly, if they feel confident or it's appropriate for them, to start putting their toe in the water. Is that a solid approach?
Yeah, the problem is with researching books is, I've read like 600 books, and they all seem to be kind of partially complete. Like there's always one strategy in one book and then another strategy in another. So I'll give you an example, right? So you might have read Kiyosaki, Robert Kiyosaki or someone like that. They'll say save 10% of your income. And yeah, that's a great idea. That's one great idea. But if you save 10% of your income, that means that after 10 years, you've got 1 year income. And then if you work for 40 years, you're going to save 4 years income. Well, that means that after you finish work, you've got 4 years to pay for, and then what, right? So it's not complete. There's parts missing. And then there's like pensions and all the rest of it, and you think, well, that's not quite right either. The average pension pot here is like 87 grand, and the average life expectancy is 77. Well, if you retire at 65, you've got to make 87 grand last 12 years, which is about £600 a month. Can you live on £600 a month?
Would you want to?
There's all these, exactly, right? Yeah. So there's all these strategies out there, and you have to be careful of just going down one rabbit hole. So what I did is I read all this stuff, and I pieced together a well-rounded wealth creation strategy that was robust and sustainable and accelerated. And and that's what I teach my clients. But it's researching books is a bit of a
and I guess a book in particular, it's a cliche, of course, as soon as it's printed, it's out of date. But with anything, it can't, I assume it can't give any advice on, movements in markets, etc., because that's all obviously way too fast. I guess it can do some of the big picture stuff, look at retirement pots, high level sort of strategies, but not much more, I thought.
I would just say, like, if you, just as a bare minimum, if you just invest 10% of your income, In fact, the couple of most powerful strategies are to invest 10% of your income. So don't just save 10% of your income. Once you've got, here's what I would do if I was to do it from scratch. I would start saving 10%, right? And every 3 months, I would ramp that up by 10%. Okay, so not another 10%, but 10% of the 10%.
Yeah, okay.
So you might start at 10 and then go to 11 and then 12.1, right? And what you do by doing that is every 3 months, you put a little pinch on your lifestyle. So, and then you acclimatize to it over 90 days. So you might go out and earn a bit more money, or you have to do an extra hour or whatever, but you kind of acclimatize to it. And then 3 months later, you ramp it up again. And that puts a demand on your lifestyle. You might reduce your living costs, right? You might go through your banking statements and go, actually, I'm paying the gardener 50 quid a month that I didn't know I was paying. We could do away with that, you know. And until you get that 3 to 6 month living buffer, that buffer of cash, and then you can keep that filtering through, but then invest. Go and put 10% of your investments or whatever you're up to at that point into, index funds, say. So a big fund, S&P 500, 500 of the top performing companies in the world. If you invest consistently in that, it's gone up 10% per year for the last 100 years. If you invest consistently in that, you're going to approximate that mean growth of that markets, which means you should be looking around 7 to 10% per year. Once you've got another buffer of cash, then you can start taking a surplus and going, right, now I can look at investing in some stocks. And that's when you're going to start to level up your skills. You're going to have to understand how to read an income statement and put a story together of how you would invest in a stock and make sure that it's something you'd want to buy and hold for 10 years, say. So there's kind of a process to follow, but the ultimate non-negotiable, I would say, is that 10% and then invest 10%, but then force your savings up every 3 months as well, because just by doing that, you're going to double your savings every 2 years. So it's a very, very powerful strategy, and it's massively underestimated. And just automating your banking so that happens without emotion as well.
That's
just automated banking. So split. Whenever it comes to anything to do with money, you want to. As I said at the beginning, my whole account structure is just to deal with emotions. So the first thing you want to do is remove emotions. They found that, I think there was an insurance company studied their client retention rate, and they found that the people who were writing a check every year to renew the insurance compared to those who had just a direct debit set up, it was something like a 78% retention on the direct debit, because they just removed that emotion of having to write a check, and see the money go out. So what I do first thing is just automate the banking. I set up 3 accounts. I have the income come into one account, and then I split it out, one for tax and then one for my investments and savings, and then one for my living costs. And I've also got a separate account for self-development, which is a 10% allocation for that as well, which of course has a intangible income growth element to it.
And talking about this kind of saving 10% and saving 10% and 10% as a kind of good starting point, do you find that in general people have the, I don't know what you want to call it, the fluff that they can sort of cut back relatively easily? I mean, imagine most people probably don't feel that they're living massively flamboyantly.
They don't now. I think we're currently in a state where 8.5 million people in the UK have been furloughed, right? And what it's done, it's put them in a state of financial freedom, because because all financial freedom is receiving a passive income or an income that comes from
not working by the hour,
not having to be active, and being anywhere, having the ability to wake up and do what you choose to do. So thinking creatively and deciding what you do, what you love to, and what you choose to and want to, rather than what you need to and must do and should do. So you're doing that, but also there's no keeping up with the Joneses now. People have realized just how happy they are they just don't need much to be happy. They've realized that now, because they've got no one to show it off to. They haven't got to go out and impress anyone. They're just at home with their basic needs met. And that is literally financial freedom. So the first thing is to just rationalize your living costs. Get it down to what makes you happy and what you need, and think about wealth in terms of time. How much time can you buy into the future, right? Because that's all it is at the end of the day. It's not money, it's just how you can cover your living costs in a way that doesn't require you to be active, going to do something that you hate. And if you can get those living costs down, you can become financially free on a very, very low income. It's as simple as that. And then it just boils down to, what do you value more? Showing off to people and having loads of luxuries, or just free time? The beauty is when you have free time, you create more income. It's just it's a byproduct, because you're sitting there thinking, right, now I can choose what I really, really want to do. You're going to excel at it because you don't require any motivation. You put together a little program, online program, right? Or something where you're sharing your love and your creativity, and you're going to earn more money. It's just like the day that I stopped working and didn't have to set an alarm, and I could just sit at home and think, right? All I was doing is trading, and I was putting on weight, and I became an awesome guitarist because I had a lot of free time, right?
Yeah.
But then I just thought, right, this isn't it. You don't want to sit there just looking at screens all day. So you think of other stuff, and that's when I realized that I could go out and talk to people, and I like to share, and I like to teach, and it was just amazing to see being able to help other people. So you're going to earn more money from being free. That's
yeah, and I guess you get on the right side of that sort of exchange, then it can be perpetually in your direction, right? You earn a bit extra money, it gives you a bit more free time. You can think a bit more out of the box. You can up your skills, be it in trading or in other area. That improves your skills. Yeah. That improves your return. You get a bit more time. You can research more, and you get on the right side of that equation, as opposed to chasing this animal, this rat race type thing, where you're just constantly chasing, paying the mortgage, paying all the bills, and constantly feel like you're behind that curve.
I've got a really cool animation. Perhaps I'll send you the link.
Yeah,
so you
great.
can put it. It's an animation that basically describes everything you just said, and it's like a machine. It's kind of like a water liquidity system, and it's exactly what you just said.
Yeah, I mean, when I sort of exited the traditional approach, which was, you go to work, so you go to school, you go to university, you get some pieces of paper, somebody might give you a job, you work 60 hours a week for the rest of your entire life, and CV, just going from one job to the other. And yeah, it was a bit of a game changer when I finally exited that. And yeah, it's a different world. I always feel like it's like the Matrix, and that's like the closest analogy I can think of. Like everyone else is, the regular people are in the Matrix. It's like, there's a life outside that. Takes a while to get your head around.
I know. Just going back to what I said about investing 10%, if you do the maths on that, right? If you invest 10% of your income at 10% returns per year, you will replace your income in 20 years. And anyone can do that maths, right? So that's just the bare basics. So why they're not teaching that in school, I have no idea, because they're going out and working for 45 years.
Well, you know why? Right? Because those teachers are working 40, 60 hours a week, not got any savings, not doing anything. So,
right. But then if you force accelerate your savings, and then you go and you can generate another 10% income per year, as you say, through the top, and the system compounds, then you can compress it down to about 10 to 12 years. So then just by doing two very kind of basic things, by controlling your income source and saving, and force accelerated savings, and chucking it into an automated investment that you don't have to think about, you're talking about a 10 to 12 year retirement, which is available to anyone at very low, it's crazy.
And I imagine most people, and I'm probably guilty of this too, asked me 20 years ago about anything I would invest in for 10 years. It just sounds like eternity to me then, right? And 10 years sounds like such a long time. Now it sounds like absolutely nothing. I feel like a fart and 10 years have gone past. And so now it seems like, 10 years doesn't sound like a fictitious length of time to invest in something at all. And, most people don't have a good retirement plan, and it gives people 10, 12 years to be able to replace that sounds like a a really solid approach. Of course, if people could achieve that. And most people have no plan, right? I mean, my dad, his entire goal was to basically die before he got to retirement. Unlucky for him, he's not dead yet. So he's like, oh shit, what am I meant to do now? But I mean, he's okay financially, but he's kind of a bit of a joke, but he was quite serious about it. He really wanted to just die at least £1 million in debt. He just would rather have. So yeah, no conscious plan.
That's the thing. People don't think that far ahead. They don't think in terms of what will my life look like. Because when I'm 60 or 70, my brain's going to be the same. I'm still going to feel vibrant and I want to do things. It's just my body might not allow me to do backflips on the trampoline and stuff. But I'll still have the same mind, and that scares the hell out of me. Like that is one of my drivers to make sure that. I'm not in that position, and you don't want to end up running out of money and then thinking, "Shit, I've got to die."
Yeah, it's pretty horrific.
Otherwise I become a burden on my kids, and hope that they had a value on financial freedom so that they can look after me.
Yeah, no, I mean, also the thing that kind of scares me is injury. Injury of whatever sort could prevent me or anyone from doing their job, right? So the more productize. I create a lot of digital products for people, right? So one of my driving reasons I do that is I think it's really important, and I've to a degree productized myself. There's more I can do, and I'm working on that. And to put my wisdom, knowledge, and insights into sellable packages, that if I want to take weeks off, I can. And going back to your point right at the start, I can afford to take a week off and not have a total mental meltdown. Because I'm actually still getting income when I'm doing that. And of course, a lot of entrepreneurs aren't in that place.
No, financial freedom to me really is around three things. And it's liquidity. So like your liquid assets, the things that you can liquidate within 2 to 3 days, having liquidity, being nimble and free. And then your lifestyle costs and controlling those. And then the leveraged income streams. So that's where you talk about making the right income streams, not going to sell your time for money, not going to a physical location where you have to sit there and you clock in, clock out. That's not liquid. It's not, you're not nimble, you're not free. Freedom comes from developing the right income streams, and income is a massive component. So I'll never stop generating income streams, whether it's compounding dividend yields or maybe I'm creating a business. I'll create businesses till the day I die. And it's a case of creating the right income stream. So digital products, online, timeless, spaceless, no wear and tear. Yeah, you want to be able to, as you said, you read a book and the book's outdated. I'm writing a book now, and I'm focused on making it timeless. I don't want to use phrases like different pieces of software or websites that are out there at the moment, because they'll be gone. So creating the right income stream. So digital products is a great one, where you can there's no opening hours, there's no location. It's
that's changed a lot. I mean, I've explored this area a lot recently, over the last couple of years, and I've been stumbled across. I did my first kind of digital programs about 10 years ago, and that was originally just like a webinar course, then evolved into a DVD. Remember DVDs? Which actually sell like a box set of 12 DVDs through the post in the olden days. Of course, now there's some really sort of sexy sort of technology available, which is until just a couple of years ago was only being used by the big corporate companies, global companies, and they're using it to onboard their staff, and it was highly effective. And it's only now really starting to kind of filter down. It's going to be becoming accessible. So one thing, I don't want to go into this area too much, probably another conversation, but I just think people need to be careful about preaching at people. It's very easy to create a YouTube channel. I have one or two, but it's actually about engaging with people. But now there is technology to do that. So someone's in that space and thinking, how am I going to replace my workshops? There's a new wave of tools where you can get a lot more engagement with people. And I think this is something that you've been looking at, right? You've got some sort of courses yourself?
Yeah, we've actually developed a trading education program, and we've developed a wealth creation program, which is the Tiers of Freedom. And we've used all these great software tools and at our fingertips to deliver really elegant programs and very little cost, very little cost. And I recommend that if you've got something to, as you said about being preached to, I think people struggle to sell things to people because they're telling them what they need, and instead of showing them what they want. So I've always been like, if I want a six pack and I go to a fitness guy and they're telling me you've got to change all your lifestyle and you've got to change your bills and your money habits and you've got to get your mindset right, I'll be like, oh no way, mate, I just want a six pack, Whereas I might need those things, but I don't know that I need them. So I'd much rather be told what I want, sold what I want, get me in, and then give me what I need. I think if you're telling someone to just be happy, motivation, success, there is no negativity, be positive, and you'd just be like, you don't get me, you don't really get me. So I see a lot of that going on, and they wonder why they struggle to make sales. You really have to understand your client and know what their wants and needs are, connect with them there, and then bring them in and give them all the other bits. It's very, very, very tempting to go and show everyone all the lovely parts of your program or your course, but you want to keep it back. You want to hold it back, have it as a nice surprise, then go out and just resonate with people. Get people resonating with you on your message and why you're doing it.
Yeah, that's really solid points, actually. I always think that business is easy, it's just humans that make it difficult, because we are fundamentally complicated people, right? So my background's in design, and I actually got, a long time ago, a degree in packaging design. If you ever go along to the supermarket and watch other people making their purchase decisions, and the reason they chose that particular brand of tomato soup, apart from perhaps it's a brand they've used before, is they don't know. And yet, as a designer, it was our job to try and work out, well, they scanned past it in like 0.10 of a second each can, and they don't even know why they purchased that, and I've got to work that out as a designer and then somehow put it in. So we are complicated beasts, and it takes a while to learn
complicated.
That. Yeah,
I see. Obviously, the biggest part, the easiest thing to do is just to go out and use this power of social media to talk to the world. It's that's the best way to get people resonating with you. And when you build kind of an army of fans or a community, if you like, any business you launch will do well. It's just like Elon Musk just launched a flame throwing business for fun, and it sold like 7 million of flamethrowers. But who cares about flamethrowers? They just did it because it was anything he does. And you only have to look at their followings in compared to the ratio of their business. I think Richard Branson's got like 4 million Instagram followers, and Virgin's got 200,000, and Elon Musk has got 31 million Twitter followers, and Tesla's got 3 million or something like that. So, it's all about your delivering that message, making sure that people feel like you understand them, and connecting with them at that level. Then they'll buy anything you sell. It's almost like we're
complicated, maybe.
I see a lot of entrepreneurs put together this program that they think people need, which they might need, but they don't know they need it. And then they're on a back foot. They've then got to go and tell people why they need it. It's like, you need this, rather than just go and speak your truth and get people to go, oh yeah, this guy understands me. What else do you do? Oh, I do this program. Oh, let me have it.
Yeah.
You don't really have to sell it. It's like, why are you making a rod for your own back? But yeah,
and
that's another conversation.
Yeah, indeed. And have you always been an investor, or did you have a regular job before making these conclusions and moving this direction?
Yeah, when I was younger, I had a job, and it was my goal when I had my first son to become financially free. That's when I had a kind of rocket up my behind, and put together this plan, and that's where I become obsessed with shortening the time to replacing my income. And I made a lot of mistakes and a lot of setbacks, but I ended up doing the whole lot, getting up to speculation, which was, as I said at the beginning, is the final piece of the puzzle, just accelerating the returns so that I could narrow down the time I actually got it down from 10 years down to 3.5. So that was the final piece in the puzzle. And then at 29 years old, I didn't require an active income, so I was completely mobile, completely financially independent, if you like. And now it's just about building complete freedom. So it's like...
But presumably there was still a degree of maintenance going on, right? There's still got to be some level of due diligence about, markets haven't moved dramatically. There must be still some, always feel that we have to be sort of careful, dig a little bit deeper. Is that fair that there was at least a sort of base level of work you had to do?
Absolutely. So as I say, the way that I built the investment portfolio is of very, very low time, low skill, low effort, low risk with lower returns. Then I moved up, then I moved up, then I moved up. And really all of my time and skill and effort goes into trading, because that's a very highly skilled method of producing an income. You have to understand the markets. You have to know how to adapt very quickly, and you need to master mindset so that you don't become driven by fear and greed, and it's just a process over outcome kind of approach. But now every time I generate an income, I try to make it mobile, and then I try to make it passive. So first of all, make it flexible. It has to be flexible so that I can just do it from anywhere. Otherwise I won't feel free anymore. I'll feel trapped. Once that's available, obviously we've got the internet, and trading you can do anywhere, and investing you can do anywhere. It's then about making it passive. So how can I reduce the time on this? How can I define passive income as something that takes me less than an hour per year. So that's real, it still takes time, but it's passive. Right, yeah. And then there's kind of semi-passive, and then there's I've got definitions for that as well. But really, my goal is to now, if it's taking me half hour a day to do my trading, which is about right for my swing trading, then I want that to take like a minute a day. So now it's about developing, algorithms.
So it's all about efficiency.
Yeah.
It's all about efficiency.
I see my life like Tetris, where you got the thing, and then the thing comes in and clunky, and then you have to kind of compress it in, and then bring in the next thing, right? And then it's like, get that fitted in. So this is like my time, and that's how I manage everything. So I take something new on, make it all run efficiently, so that I'm free, and then do the next thing. And I'll never stop doing that. I love business. Yeah.
Well, it's good that you talk about the next thing, because I know someone, I don't want to go into huge details, but they created maps, just regular paper maps. It was a motorcycling enthusiast, so they were specific for motorbikers. Right. And he had a great lifestyle. You just basically drive bar to bar around Thailand, Laos, Cambodia, Southeast Asia, go into a bar with basically a traveling salesman, a bag full of maps, sell them, make enough money to last a week, and it's great. But then 10 years forward, hadn't replaced the maps, hadn't embraced Google or anything else, and it's based on borrowed time, and every year he's having to live smaller and smaller and smaller, and he feels he's kind of too old to embrace new stuff, and it's like, so you have to have some sort of be a new animal, or maybe it's only every couple of years, but not be constantly necessarily.
That's why I've always invested 10% of my income in self-development as a non-negotiable, because there is a intangible income growth element to that, which you can't. It's scary at first, but you just trust it, and you go and learn, and you connect with someone. As you've been in networks, and you meet someone, and you can do a partnership, or you get an opportunity, or you'll learn a new skill to better you. It might just be you become better at trading or better investing or whatever you're spending it on. You will always grow your income by doing that. You can't not, as long as you're applying what you've learned, right?
And it's a great thing to invest in. It's it's obviously something that no one can steal me. So
no one. You can have all these recessions and all these crashes, and you can lose your house and lose everything, right? And you can have coronavirus. Nothing can take away your wisdom. So as soon as all that's gone, you can then use your brain to go and serve people, or start the next thing. You can't lose it unless you obviously have a bad accident. But hopefully you don't have that.
Indeed. As someone really ignorant, I've never quite understood why trading is so hard, right? I mean, if you just didn't look at it at all, it's a 50-50 bet, isn't it? Why is it so hard? It's going to go up or it's going to go down. Why is it so hard?
God, that is a long answer.
Maybe for another time.
Yeah, essentially, as a trader, you want to make money quickly. You don't want to it's not investing. So yes, the forex market consolidates over time. So, at one point in the future, it will be the same price as it was in the past. The problem with that is, if you're going to trade that way, you better have a lot of money, because it could go up and up and up and up and up for years, right, before it comes back down, and you're going to get a margin call from your broker if you're approaching your limit in your account.
Yeah.
So it's not really the approach you take with trading. The key to trading is to have this is what trading is. You look at the markets and you see patterns, psychological patterns that play out time and time again. That's all it is, because a chart is a graphical representation of human psychology. That's all it is.
Yeah, en masse.
And yeah, exactly.
Yeah.
So when you see something that happens frequently, your job is then to build a plan, a consistent plan of how you can capitalize on that little move that happens time and time again, and then having the discipline to go, this is where I get in, this is where I get out, and this is where I accept I'm wrong. Okay, and then if you can go and test all of that over the last 10 years of data, and you go, oh, do you know what, that provides a profit over time, it might provide 20% or something like that, then your job is to go and just do that. And you have to accept that you might be wrong for 2 months of the year, and you might have 7 losing trades in a row, you might have 10 losing trades in a row, but you know that over time it should produce a profit. Again, we don't ever know the definite outcome, which is why our job as a trader is just to prepare our mindset mentally by having that black and white back-tested data, and then to go in and trade it live. But yeah, it's the biggest self-discovery process ever, learning to trade. It's
I mean, that's probably the only thing that really does attract me to it, actually, is
I recommend everyone learns to trade
for just the skill. Yeah, I think that would be really great. Cool. Okay, I think that was absolutely excellent. So you talked a little bit about courses. If perhaps people are interested in learning a little bit more about that, how would they go and find out more information?
Yeah, all I would say is go and listen to my podcast. Actually,
Okay.
It's completely free, and it's called Always Free.
Okay.
And it was at number 1 on iTunes for quite a while, and it's basically my entire life story. So you'll learn everything about what I did.
Excellent.
No need to buy a course. Just go and listen to that.
Excellent. Well, I've been really awesome to get you on the call today. I've learned a few bits there, so that's good.
That's great. Thanks for having us on.
Awesome, man. Really enjoyed it. Really good to connect with you. Hopefully stay in touch with you and see what happens in the future.
Yes, mate.
Cheers, man. Have a good day.
Thanks, Simon.
Well, that was Jason Graystone. Really great to speak with him. I'm going to grab that video clip from him, and I'll include that in a link into the description lower down. So do check that out. Plus some information. You can get more information from Jason, particularly a link to his podcast, which from what I spoke to him about after the actual interview, lots of really great information there. So why not go and tap into that great resource, all about his life, his journey, what worked for him and what didn't. So okay, a lot of insights there, I think. So that's it from me. Hope you enjoyed that, and I look forward to speaking to you guys again. Bye for now.